Hey, good morning, everybody. Hope everybody's doing well. Thursday morning, June 4th, 2020. Let me get your chat up here. See who's here. We've got Naveed, Linda, Ron, just looking at the top here, getting things started. Dave giving me a little bit of an intro, and Daniel, of course, giving me the knock knock. Thank you very much, guys. It's good to see you. Looking at the markets, boy, this is a wonky one right out of the gate. We started, of course. Thank you, John. Good to see you here. Hey, so we started early this morning. Futures trading down. Then we got news from the ECB about 8 o'clock in the morning that they're going to actually expand their bond buying program. Gave the markets a boost. Actually, Dow futures took us into positive territory. Just no face freezes yet. I think you need to refresh there, Ron. So we went positive on futures just for a second. It was as if it was just enough to say that we went positive. That's it. And then all of a sudden, everything fell out. We're trading down about 160 points right now in the Dow. If we were open, that's the implied open value on the Dow. So we are going to see what is going to happen here as this morning gets traded. You know what? After yesterday, and I don't know who coined the phrase for me, but I obviously was using Wednesday bump. And then we said, what is Thursday? And Thursday slump. And it appears that's what we may be in line to get. Let's take a look, as we always do, at the screens here. At the slides. I think everything's going to be okay on the technology side. Call me an optimist, which I am. And just as I say that, I get the high CPU usage message on my screen. But let's look at the slides here. Futures showing the Thursday slump may actually be in play this week. Last week, we ran right by it. Stocks ran through Thursdays, closed strong on Friday. So we're going to talk a little bit about that, about the market setup today, and also what a couple of stocks that I think are up for the grabs here, that last group that's rallying here. And then the next subject I want to hit, grab them while you've got them. And this is not meant to be funny. Everybody use the Q&A button there. Greg just opened that up for us. Not meant to be funny then, especially since I've got my first typo of the day in there. But looking at this market yesterday and tearing everything apart. Good morning, Gary. Tearing everything apart. I really started to get this feeling that, wow, there's some stuff going on under the market that we're not looking at. Specifically, I started looking at the derivatives on the volatility index, the VIX, because that's where you find a lot of the big money managers running around doing things. It's also a little bit of the smarter money. You know, betting on the VIX is a little harder job to do. It's not a slam dunk. So I found some things that we're going to talk about this morning that are starting to tell me that, hey, you know what? This rally has been great. I doubted it, obviously. I'm not going to say I'm a rally hater, as my children would probably tell me. But at the same time, I've respected it as I've been kind of pulled or forced into not grabbing pennies in front of the steamroller. But now you've really got some signs here that, hey, everybody really is rallying on monetary policy. And I told you months ago, it's hard to be bullish on monetary policy alone. And I think that's where we're getting, especially as we head into that lull right ahead of earnings. So we're going to talk a little bit about that. And that's basically, is the market in a V or not turning back? A little bit of a change of heart here over the last 24 hours here. So anyhow, and we're going to talk about rotation, the last area. And of course, I'm going to give you three names that I like today. One of them, you've heard me pounding the table. I'll give you a hint. Anytime anybody asks about Royal Caribbean, American Airlines, Delta Airlines, this is one of those stocks that I always say, hey, here's your better alternative. But two others that I've mentioned, but I think that you look at it for this last push, bullish stocks. So this morning, again, futures higher. Do we go with the flow? ECB expanded their bond buying program, giving futures a bump and right around 8 o'clock in the morning. Now, as I mentioned, we've been down, we popped up. Now we're down again below more than 100. This was not a move that was expected by the market. Hey, good morning, Kevin. Good to see you with us. Also, Joe, good to see you. Notice, yeah, we'll see about the jobless claims. Actually, we'll get that number, the big one, tomorrow. And I'm a little bit afraid of this. And I think you're going to see people posturing for an unexpected number today. But anyhow, the ECB's move was not expected by the market. All the bond markets, the Italian bond market took off. This was really a bit of a shocker here for everybody. And what it tells us is that the ECB, if you remember back in 2008, 9, 10, or 2007, 8, 9, and really it was 2008, the ECB was very slow to act. They kind of got pulled into the mix in terms of the stimulus programs. Our central banks really led the way. And in this case, the ECB right now, Christine Lagarde is saying, hey, we're going to move. We're going to be aggressive. And people are, good morning, Robin. Good to see you. Hey, the ECB is going to be more aggressive here and jumping into the mix, which is good and it's bad right now. It's good because obviously it helps keep liquidity around the global markets, but it's bad because it's signaling that, hey, this really is maybe all that we've got for a little while, maybe the next 6 months to rally upon. If you look a little bit into yesterday's rally, it's telling us that there's some confidence. Names like Google have been trying to find a way to go here. Obviously Facebook has been running into its issues. I've got a couple of those charts that we'll look at, but you know what? The high beta trade, and you don't consider large cap tech anymore to be a high beta trade. I've kind of coined those as a modern day blue chips. When you look at some of those tech companies out there, they really are the modern day blue chips. They've kind of been slumping here as risk return is coming back to the market. And this is the high beta stocks now are the financials, especially those regional financials, small cap stocks. Look at what the Russell 2000 did yesterday, blowing away the S&P 500. And for this moment in time, retail and energy stocks are definitely in that high beta area because of what's going on with the reopening. Those are stocks that led the way yesterday with very strong moves. So you look at this, and the defensive sectors and the large cap tech lagged the market, indicating that money is, again, like we saw late last week, migrating into these areas of the market that have been cash starved. They've not seen a lot of cash flow coming into them, and now they're that last bastion of possible returns for investors to find, to uncover. And they are. They really, truly are the area where you're going to find the last 10, 15, 20% moves in the market. Don't think you're going to see those come from large cap tech. But the problem is they come with a cost, and that is the volatility and the risk that's associated when we hit the top of this trading. We'll call it it's not a trading range, but this moment in time. Good to see you, Tommy. You'll be fine. We're fine. You're going to catch up very quickly. So this leads me to that grab them while you've got them here. We've got a lot of gains that you've got on the large cap tech. It's time to actually start to put in some of those tight stop losses that I talk about as your first round of hedges against the market. I've gotten used to using the phrase rarefied air here over the last week or so. And when I'm writing, for whether it's commentary, whether it's something, even an email, or even talking to people, when I talk to reporters, that term, whenever it starts coming up more and more, you get that mental little, the umpire's clicker, the umpire's counter that's in their pocket to keep track of strikes and balls. And I'm tracking that now, and I find myself saying more of it. Last night, I just went out and looked at what my net delta on my portfolio is. And if people don't know what net delta is, it's basically a measure of how much, how in the money your portfolio is, what it's moving compared to a move for the underlying stocks. My net delta is incredibly high right now, which means I'm way into that bullish camp, and it's time to get a little bit more towards the middle here. Hedge myself, balance myself, whatever you want to call it. And that's what I'm telling you today. It's time to go. If you do it today or you do it this weekend, look at your portfolio's net delta. Where's the risk right now? Are you out there on the wings with a lot of calls in your portfolio, or do you have a lot of long positions? Maybe you're on margin, whatever the situation is, look at that and start to balance it out. Before anybody mentions it or asks the questions, yes, you need to have your hedges in place. Adjust your hedges or maintain your hedges here. Do a little hedge maintenance on them. Actual market volatility, though, and this gets back to what I was looking at last night as I was tearing the market away. And we'll get to some stocks here. Start thinking about or write down one or two of your ticker symbols, because when I give you the call, we're going to go fast and furious on the tickers. I want to jam some of your charts in today. I want to spend a lot of time doing that. But actual market volatility is now trending much lower Granted, it's coming from the comparison that we saw in March and February, the end of February, and certainly in April. But the actual volatility is now out of whack with the implied volatilities, and that it's much lower. Implied volatility is telling us where the traders think that the market's going to go, and then the actual is just that daily comparison of what the market has done. That usually leads to a shakeup. That is one of those situations where you look at it, and when the volatility gets out of whack like that, let's maybe turn my microphone up a little bit. When you get out of whack like that with the volatility, that's when you look at this, because quiet markets regarding volatility are turning markets. Usually they're turning up or down. It's one or the other, but a quiet market is one of those inflection points. And given the fact that you've got so many of the companies that are trading above their 50-day moving average, the percentage is now above 80%. That usually happens as market tops happen. And this is just looking at technicals. The 20-day moving average, we're up above 80% right now. So all of these things are telling me that the market is overextended. So that quiet market and that turning market, that inflection point, is much more likely to be something that's a downward market, simply because we've been ignoring the fundamentals, and that's fine, because market interpretation is market interpretation. But you've got to take into account that this market could quickly take a nice 10 or 15% pullback, which, quite frankly, would be a healthy pause that refreshes right now. So the last point on what I was doing last night, the volatility derivatives are beginning to see, and these are the options and futures on the VIX, and increasing aggressive bets that volatility is setting up for a return over the summer. Not going away, but coming back. And usually we do see volatility go up in the months of June, July, August, September. October even is obviously the volatility haven month. That is telling us that the smart money investors are out there betting that we're going to see a VIX that goes back up above 30, 32. That range right now is, from what I was looking at on the option activity, 32 to 30 range. But all of a sudden, we're going to have a VIX that begins to trend again, which is going to be the danger. Here's your VIX picture of the VIX coming in at 25, where I think we're going to see a little bit of a hard bottom. Notice that the volatility of the volatility, as demented as that sounds, so you've got more or less the third derivative here. The volatility of the volatility is actually giving you a sign that, hey, this is going to perk up again, and we're going to see volatility start to go higher. We're going to see it make a move. Right now, with the 200-day right there at 25, a key mark that we saw last in February and March. I think that move is going to be a break above that 20-day, which is just at 30, and then probably pop up towards that 35. Thank you. That's a great pull, Greg. One of my 10 commandments of trading: stocks are driven higher by speculation, not fundamentals. And that's exactly what we've had here as the market bottomed and rallied up here. It's speculation. All of a sudden, fundamentals are going to step in and start to give us a little more of a reality check. And you've heard a lot. Naveed, great question, and I'll take it right now simply because it's timely. If you're looking to play the VIX, there are a couple of ways you can do this. First of all, you can trade options on the VIX. I actually use options on the VIX in the night trader service. So we have gone out there and used VIX options, and you can do them with weeklies, you can do them with monthlies. The monthlies expire on Wednesday. It seems a little bit different, but it's one of those situations where you just figure out that you're trading the right one. But go out a couple weeks, a month or two. You can use a VIX option as a hedge. It's the most aggressive of the hedges. But we actually had VIX options in February when the VIX started to go a little bit higher. It's one of those where you can absolutely, the premiums are a little bit higher, but the first way to play the VIX is to go out, use now we're getting into giving that individual advice, which I really can't do, but I'll start to pinpoint it for you here. If you look at the 30 level, the 30 level is key right now. The 25 level is key from support. If we see a 25, if somebody's interested in playing something that's more of an at the money, they look at the 25 and you maybe play a July or an even August expiration option on that. If you want to get a little more aggressive, pay a little less, you go out for the 30 or 35s and you maybe extend your time premium. That turns it more into a hedge that you'd be playing against your portfolio, that is a little more aggressive. But at the same time, I think in this situation where you see a bottom in the VIX makes more sense to look at the 30 and 35 strikes. And that's for everybody looking to hedge, not just one person. But this is one of those situations where you look at possibly the 35 or so to be a little bit out of the money. And that's not like you're shooting the moon going for a 40 or 50, which you could if you wanted to be incredibly aggressive. I think you wait until the VIX starts to turn up. Oh yeah, you know what, Bill? I owe you ice cream. That call on AEO was amazing, and the stock rallying more than 17%, just off the charts. And it shows you again that go back to the trading rule, the commandment that Greg just put up: speculation versus fundamentals, because the fundamentals weren't great for American Eagle. I love the fact I've got a friend that works at American Eagle up in the C-suite, and I love the fact that they did good. At the same time, I think you're going to see some reality come back into that. This is, again, one of those plays when you look at retail. Retail is one of those huge plays on the reopening here, and that's why it's one of those last places where you can squeeze some returns out of this market. Squeeze them. Let's talk about Joe's question real quickly. What do you want to watch for market direction today? Market direction today, obviously, we're going to start on a weak note. This is going to test the fortitude of this rally. If we see the market actually start to bounce, and my guess is you're going to see some buying coming in the the 10 o'clock to 11 o'clock hour. 12 o'clock to 1 o'clock is when we start to see weakness come in. If we start to spiral down through 1 o'clock, you're going to see a market that's going to close on its lows. It's probably going to take 1 or 2% away from us, because think about it. A lot of people are looking at this market as being in that rarefied air. And in this particular point, a lot of people are waiting for this to trip up. And when that happens, you're going to get a cascade of sellers that come into the market. So the important hours you watch today are going to be that right around the 10 o'clock, 11 o'clock. After that first half hour trading, get all the book orders cleared out. The market starts to hit a balance on where it's going to trade. Watch where the buyers take it from 10 to 11. If we just start to careen lower, I think you're going to see a market that'll just trend lower all day long. Not great, because I've got calls open right now in the night trader portfolio, but I've been looking at a lot of puts. We're going to be adding puts. And as I said, nice pull on AEO there, James. That's awesome too. As I said yesterday, and I told my night trader people this, it wasn't to the market open group, but the next set of 100% returns that are going to come in the night trader portfolio, and they'll come here, are going to be puts on this market, and they're going to be coming fast and furious, and they're going to be getting prepared for that right now. The calls that you should be out there playing are going to be one of those situations where you're happy walking away with a 20 or a 50% return. We closed out a 25% return 2 days ago, a 50% return yesterday. We're going to take another 25 today. You know what? Don't push it on the call side. Don't get greedy. Don't push the envelope. Get set for what's going to give you the 100% returns if you're trading options. And that's the next round of puts that you'll be trading. So let's talk for a second about sectors of the market that are left out there to rally. These are the not low-hanging fruit. You got to stretch a little bit to get to these. Low-hanging fruit is, for the most part, done. We'll get to the question on Zoom here in a second. I saw Zoom by, it's right there. Benjamin asking about Zoom. The answer is yes, I do. I think it's down 1.5% right now in pre-market. But, oh yeah, great day trading environment. Definitely, Jerry. This is where you can follow the lead from the morning. And as I said, if you watch that 10 to 11 o'clock trading out a window, you're going to get an idea of where we're going to trade into the afternoon. And this is the kind of market, again, because we're pent up with sellers right now. People have been asking for weeks, when is this going to go lower? When is the market going to go lower? Not if, but when. So as we creep up on those highs, yes, your puts are going to get some love. So when we creep up on those highs, and you may want to maintain them, put some maintenance on them if you need to increase the puts because they've gone down in value. Remember that that's an important part of the hedge. But as we hit these highs, or we get near these highs, everybody's going to take that again as that mile marker. I always use that mile marker analogy. You know, when you're a child looking out and watching the century mile markers go by when you're driving to Maine, in my case, and it's a 1,200, 1,300 mile trip. It's one of those situations where this is going to be a mile marker. People are going to take stock and say, do we really want to be holding right now? And I think you'll see with a little bit of selling pressure, this market could be toppled, at least for a short-term pullback. The low or medium hanging fruit right now, small cap stocks. So the IWM rallied strong yesterday, and it was being pushed by a short squeeze rally. When you look at the small cap sector, that's where all the short interest has been right now. Some travel-based group. Watch. Vegas is opening today, folks. This is the big one as far as I'm concerned. The other thing that goes into market timing like this, and I'm going back to the screen here for a second. The other thing that goes into market timing and looking at the market is big events, whether it's crossing a milestone, Dow 10,000, et cetera, 20,000, or an event. Las Vegas is opening today. It's kind of a signal of I don't want to say the end of the social distancing project, because it certainly isn't. We're all still doing this, but this is a marquee moment with Las Vegas opening. You need to watch Las Vegas and the numbers over the next couple of days, because if the numbers come out good and people are going to start getting there and start gambling, then you're going to see a little bit of a shift in the travel industry. The airline companies are already increasing seats that are going to Vegas. So this is one of those situations where Vegas, I think, is one of those canary in the coal mines that you want to watch. It's a social experiment in and of itself. It tells us how the restaurants are going to open, how retail is going to open, how large groups of people or larger groups of people, and whether people are going to be willing to travel. If you watch this over the next couple of weeks, I think it's going to give us a lot of indication what you can expect for the summer here. If we don't see large numbers coming in, if they don't start to get, and they're announced that they're going to try to get a lot of this convention business to stick with them, that's later in the year. If they don't make that happen, I think you look at this market from one that it is ready to topple, and that's going to be one of those signs that, you know what, we may have that March bottom still in play. You remember a month and a half ago, I said that March bottom should still be in play. You look at Las Vegas Sands, yes, you look at these companies right now, because just like the retailers, if there's a sign that people are coming out and gambling, they are going to get a spark. They're going to get that catalyst. And we'll look at those charts here in just a second. But just that is one of the things. And I said, on the travel based, you want to look at Vegas here as that test market, if you will. And if that starts to take off, it's not only the casinos that are some of that, the sectors that are left to rally, but also that's where you'll start to see the airlines get a little bit more. Obviously, Southwest being the big one that flies into there. And Southwest, my favorite airline right now in this environment. Another group, financials, especially the regional banks, because the regional banks are still dodging the bullet of negative interest rates. Everybody started to factor that into their balance sheet. That's not right now, interest rates creeping up. Regional banks are getting a little bit of a bump. We opened up a Fifth Third call in the night trader portfolio, and that zoomed up to 30. We almost got 50% gains on that yesterday. We're at 36% when the market closed in a day or two. So those are quick movers. Retail and restaurants. Obviously, if you look at some of the retail and restaurants, I don't want to give too many out that we've been trading in the portfolio, but that's also one of the groups that we're seeing a bump from the reopening. And this reopening is that last little area of the market where you can squeeze those returns out. These are the risk assets in the market's risk on trade. Large cap tech, all of that. Put it on the sidelines for right now. Let's look at three companies real quickly that I want to give you that I think are companies that you want to hold through the next couple of months, actually. These aren't next couple of days. Zillow Group, the real estate. Redfin's another alternative to this I like. A little cheaper on Redfin, though. Zillow Group, if you look at it from the perspective, the real estate market is alive and kicking. I mean, you still got, I think I've mentioned my older son bought a house. The house was on the market for 2 hours when they put their bid in, and actually had to tell the person, hey, we're going to pull the offer if you don't accept it right now. This is a seller's market. And if it's one of these situations where there's an area that is going to be very active, especially with the COVID-19. You look at the Zillow and you look at Redfin, because you're able to walk through houses online. You're able to, with Redfin, you're actually able to purchase houses. They're realtors in certain states. So you look at these two groups, 62.5 right now. I've got a target of $80 on Zillow. We'll see if I hit that. Everything has turned out, and you can see that this has been a breakout here. getting ready to take out its highs from earlier in February, and the stock was on fire back then as well. So this burp in the real estate market's passed right now, and we're still in this nice trend that's forming. So you look at the Zillow Group, and Redfin would be your other. C.H. Robinson Worldwide, another company that I like and I've been talking about here. You notice the same breakout. Volatility is still, We're on number 2, John. I don't know where you saw Zillow. I'm not going to go around and look. C.H. Robinson Worldwide. CHRW is a ticker symbol. We're on 2 typos, so one more means ice cream. CHRW going up through that $80 mark, and that's what I was watching for the breakout to start. This stock is heading towards 90 and possibly even towards 100 if you play it for the next probably month and a half or so. Zillow Group. You're correcting me on the fact that I didn't use the ticker symbol for it's a Class C shares is Z, just a simple Z. Anyhow, sorry about that. Let me get back on. John, you're taking me off you're throwing me in the weeds, buddy. That's okay though. I like it out in the weeds. So anyhow, CHRW, this is a trucking company. They're very effective in their logistics here. Obviously retail starts bumping. No, you're fine, John. Retail starts bumping. We need to start seeing things go over the rails and the roads. CHRW, I think, is a better play than looking at some of the CSXs and the railways out there. Even though railway numbers are actually, the rail car numbers are starting to go up here. You're actually seeing an increase in a lot of that logistics transportation. IYT is going up. The airlines are still pulling it back. The IYT is the ETF if you're looking for a broader play on the transport stocks. CHRW, though, a great play as it breaks up above that 84. We may see a little bit of a pullback here. I love the fact that we're seeing volatility as well as volume come into the trade. This is one of those trades that I really think is going to actually lead you through the second half of the year, CHRW. And then the last one, you already saw it because I bounced around to it, Expedia. We talk about the travel play. If people are going to go to Vegas, they're going to book this online. Typically, if they're going to go to Vegas, they're looking for packages. Expedia is good at putting packages together. You can go through the airlines. I typically do it simply because I've got my Delta Rewards card. But at the same time, you can still use that when you go through Expedia. People are going to start traveling a little bit more here. And I think whether it's good or bad, as we start to see that pandemic ease, you're going to see people getting out there. Expedia breaking above this little trading range that had started to form, but it really hasn't stopped since it broke above its 20 and its 50-day moving average. Look at Expedia.com to take up to that 200-day moving average in the next couple of weeks, especially with the news around Vegas opening. Vegas is going to, if this pulls off successfully, Vegas is going to mean quite a bit for the travel industry and the hotel industry, but it's got to be a success. All right, start throwing those ticker symbols up right now. We got about 5, maybe we stretch it to 10 minutes. We're going to go through that as I kind of go over the bullets, but get your ticker symbols. If you put them in there earlier, I'm going to go through a question or two, and then I'm going to hit the ticker symbols on the chat area. Big population centers opening in Pennsylvania tomorrow. That's awesome to hear, Russ. Actually, it goes along with a lot of the opening, like in Vegas. I mean, we're seeing some tests that are going to be huge here, absolutely huge here. So what are my thoughts on Zachary asks, what are my thoughts about the S&P 500 January 2022 300 puts or the December 2020? Why go way out or stay close out on the day? You know what? I like to go, and this is just my personal, when I do this, Zachary, and I can say, first of all, you're looking at way, way, way out there with the 2022. I'd be looking right now at the 2021. I tend to go 6 to 8 months out, even when I'm using a hedge. And then if I get about halfway through the life of that option before the time value starts to go, and one of these days we can do a whole exercise on theta and talk about time value and options, and especially with hedges. But when you get about halfway, maybe a third of the way actually through that life, your time value starts to go away exponentially. And that's when you start to refresh it. If you buy a shorter term, you're basically going to have to scoot that time value, that time up, that where you start to refresh it. So if you're looking at something that just absolutely hold, yeah, sure, go out and do the 2022, because then you could just sit there and not have to worry about a refresh. Your time value is not going to start ripping off until somewhere 2022. My gosh, you'll be at the beginning of 2021 where you'll see it start to pull away. So if that's your objective there, to not maintain it, that's the way that you go. If you don't worry about maintaining it, you might get obviously you'll get a little more of a kick out of the closer to time that December 2020 or January 21 even put, and that'll give you a little more movement. It's not going to be as subdued as that 2022. Let me see, scrolling through, what's my take on interest rates? Daniel, interest rates inching up a little bit here right now. I'm worried a little bit about that stagflation word that we talk so much. If you look about inflation right now, and it's very obvious in food, we've seen food prices go through the roof. Not so evident in other prices. Fuel prices going up, obviously, because energy. I think you got to watch right now. Interest rates are going to start creeping a little bit higher, but the next round that we see in terms of whether it is COVID-19 or whether it's just economic slowdown is going to bring those interest rates right back down. I don't think we go negative. I think that the Fed's going to do everything they can to keep us from going negative. So that's, interest rates are low and they're going to stay low is basically what I'm looking at. Which REIT stocks do I like? It's always Digital Realty Trust is the first one that I come to. I think you can start to look at some of the REITs that have to do with this. I stay away from some of the residential, nursing home, medical REITs right now because there are too many questions there. Look at some of the residential REITs in a couple of months after we kind of get that flood of what they're expecting to see as a tick up, if you will, in people not paying rent, et cetera, et cetera. All right, let me get some tickers here because I gotta get some tickers before we get out. I will actually answer some of these questions also. Love putting together commentary for you guys. So I'll put together some commentary with Greg and we'll get that out. But let's look at a couple of the stocks right now that you put up here so we can get them out of the way. I'm going to start with BA, Boeing Air, because Joe has been asking about this all morning. Boeing popping back up. You know what? There are a couple things that are going on, I think, with Boeing right now. Obviously, the return to production, they're talking about orders possibly coming in. One of the things that I've been watching is the order cancellations, which have not been going up. So we've not seen, that was one of the big fears here, is that we were going to see many, 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 many more cancellations. And that's why they made that announcement rather quickly, or got to it in terms of putting out the news that they were going to back to production of the 737 MAX. But now you've got Amazon coming in saying that they're going to expand their fleet. There's business out there, and I think that is the big thing here that everybody needs to take into account. There's still business out there for Boeing, and that's what we saw yesterday when Amazon announced that they were expanding their fleet. And let's face it, Amazon is going to own their own supply or their own logistics network from everywhere. I think from when you talk about them leasing cargo ships that come from China, and obviously airliners and trucks and etc. They're going to own it all. And I think yesterday's move is a sign for Boeing here that it is, very much alive and well. They're not going to go away. There were a few people out there saying that they might go bankrupt. There's no way. You don't leave us with, a couple of plane manufacturers out there. Boeing was going to survive. I still think, yesterday's move, taking it up to 180, 200 is in view right now. And I think if you look at it, we talked about 120 being the spot where you wanted to buy it a couple of weeks ago. I really do think that was the bottom. I don't think you were going to get the chance for 100. 120 was your chance to get in. You could still get in because this stock at some point is going to be back up in the 300s again, even with an economic slowdown. I think Boeing has already realized their slowdown and they've hit their bottom in terms of orders, etc. Gray Television Network. I've been looking at Gray and a couple of others, as well as Nielsen. Media starting to pick up. This always happens. Another media name that's been picking up that a lot of people kind of don't talk about. Look at New York Times. New York Times going through the roof. And I should disclose I own New York Times shares myself. New York Time going through the roof, as well as Gray Television Network. These are stocks that usually when the election cycle starts to hit, they start to pop. So I like Gray Television Network, the move above its 20-day. The 50 days now turned up higher. And if I'm not mistaken, Gray Television, GTN, has a high degree of short interest on it. We played shorts on this last year a couple of times in the night trader, and now it's time to play calls. I think the stock goes up to 20 bucks here before the election, and you've got some good opportunities for some quick moves. But you saw that it got a little bit overbought, and that's why we had this little dance here where we pulled back. Watch for that to kick in right now, maybe pull back to the $14 level and then take off again. Monroe, MNRO position that we have right now in our portfolio, trying to claw its way back up above that 20-day. It's flattened out. $55 is a level of support here. Want to see this thing rally and take back up to 62.5, obviously, because we have a call on the position. The business has been sound. This is actually one where the investors got a little bit ahead of it as we headed into earnings. The earnings weren't good, but at the same time, the company is in the right spot. Monroe remains a buy right now, looking for a target that takes it above $65. Target, good question, Sandy. Target, because it is one of those that was doing very well when we were seeing the reopening. Now I think that with the more attention in the retail sector, and think of this from that money migration idea. Money migrates within sectors as well because you have people that are retail investors that move from one retailer to the other. You've got Target, you've got Costco that has been dormant right now. Costco, as the chart comes, look at this, it's gone sideways after it was just an absolute blockbuster in 2019. I think you look right now at Target and Costco and a couple of these other large box, even Walmart, and they're going to lose the spotlight right now. There's your chart of Walmart. They're losing the spotlight to companies like American Eagle. When you look at that, that means that there's better money to be found right now. And I think American Eagle probably takes a little bit of a rest, but look, I was wrong yesterday, but it's going to lose some of the focus to those smaller retails. I think when you look at Target, it's a good company to own, less volatile, and you're going to see it go back up to its highs. Not going to be as fast moving as some of the smaller retailers. I like it over Costco and Walmart, though. If you're looking for something that's going to remain really strong in the retail sector, they're due for a pullback, but Lowe's and Home Depot are in a sweet spot because home builders are taking off, and these two are in the retail sector. So you can't beat, they're literally in like a three circle sweet spot right now in terms of reopening, home building, and retail coming back. I'm going to look at REMX here. Excuse me. So this is the rare earth strategy, and rare earth. You know what? I think it's interesting when we saw the rocket takeoff last week. One of the things they talked about is rare earth mining, either on the moon or in Mars. Obviously, that's one of the bigger pushes here. When we look at rare earth minerals, you can't avoid talking about companies like Tesla and all of the let's call them the battery usage companies, even everything down to your iPhones and such. I like this play. It is one that is going to be obviously a little bit bumped up because of the values here with as we run into the rhetoric with China here. I think this is a great play in terms of an ETF that you hold in your portfolio as part of your foundation. And when I talk about that, usually it's 5 to 6 ETFs that you hold in your portfolio, along with the S&P 500, small cap, and the cubes. But 5 ETFs that are specialty sectors. This is one of them. Home builders is another right now that you hold. Regional banks in the short term is one that you hold. And then you put together a portfolio that has stocks that surround those that are the best in breed. Right now, REMX is definitely one of those foundational ETFs. I think that you can find companies within the group that are going to outperform it. But again, this gets a little bit, and this is a high beta ETF. This is not a lower beta ETF. It moves. So I think you can find some companies that are going to really outdo it. But in terms of leveling that off and getting some of that volatility, that company-specific volatility out, you stick with this particular ETF. I've got a lot more. I'm going to scroll down. For some reason, I'm not. NVIDIA. You're going to come back to seeing me here in a second, I think, simply because maybe not. I thought that I did should be keep holding Monroe. I've got to scroll down to the bottom. We've got a lot of these. AMC is going to be a tough one. AMC is actually going to be a tough one. NVIDIA is still best in breed in the semiconductor sector. Semiconductors are going to be the first to take good. I'm going to run out of time too, so we're going to get off here in a second. Semiconductors are going to take a hit when that first round of selling comes in. So watch NVIDIA because it's best in breed. I still like the stock as one of the holds right now in the sector. TJ Maxx going to break above the 56 level as we continue to see retail open up. Obviously, the discounters are a favorite area of mine. When you look at that, you look at Ali as well. Let's look at a couple of us. SKF, great play right now. If you look at it, and this is a hedge against the financials, it's not right this second. You wait until we get that tipping point, and then the SKF becomes a part of your portfolio as one of those hedges. That's a second level hedge, level 2 hedge, because that is just it is an ETF. It's an inverse ETF versus taking out an actual put option against the XLF. SKF is a great second level. Costco, we've already hit. CrowdStrike. See, there we go. Let's hit CrowdStrike coming off their earnings. Look at the stock breaking up above 100, hundreds of round number, mile marker, etc. I think you see it like Zoom pull back and come back to ground a little bit here. You're going to see Zoom. Somebody asked about Zoom. Zoom, I still have a target of 180 on Zoom. We're going to see some selling after that earnings announcement. So good to see you, John. Thanks for being with us. Naveed, let me get to the 5G and the cannabis stocks tomorrow because I've got a couple of those for you. And we'll definitely we've kind of run out of time for today, and this is a little sorted for me to be running out of time. Imagine that. Look at Tilray. I'd say Tilray. We're gonna force it now. I like Canopy too. A little bit of the larger Canopy's bouncing around again. ENPH definitely on the 5G side. There are a couple there. Neophoton. Yeah, Neophoton. Let me pull up the ticker there for you. Neophotonics, which is a white light laser. It's a semiconductor, but it's considered in that 5G area as well. That's one that you want to take a look at as well. This was one that I liked at $8, now up to $9.05. Just throwing a couple out there, but we can cover it more in depth tomorrow. All right, we are going to we're going to go ahead and be in tomorrow. We'll be here tomorrow, guys. I can't. Worst case is if I do what I need to do in the afternoon, I can't be away from you guys. So no, we will absolutely be here tomorrow. We're going to do more of the tickers. We may even just start with the tickers instead of finishing with the tickers, so we don't have as much of a time constraint, because this is one of my favorite things, and obviously you guys like it. We'll go back to free form Friday tomorrow, and we're going to let you drive. All right, you ask all the questions, you throw the tickers up. I'll throw in a couple of my comments along the way, but we're going to open it up with a Freeform Friday tomorrow. So I hope you look forward to that. We'll get some more commentary out to you as well. Let's look at this market. Watch the 10 and 11 o'clock hour. If we're trading lower, you want to make sure that you watch for a slide into the afternoon, and that's going to set us up for a harder Friday, believe it or not, because people are going to want to get out ahead of the weekend. I will see you tomorrow. As always, I wish you the best trading success. Hope you have a great day. 10 to 11 o'clock, and then 1 to 2. Watch those hours of trading, all right? That's going to give you everything you need to know about the close today. Have a great day, folks. And as always, I wish you the best trading success. Bye-bye.